King James degree.
Yo, what's up, everybody? Just wanted to hop on here and do a quick review of last week. We saw a lot of crazy drops, but there's some things that I want to bring to y'all attention in terms of fundamental analysis with the interest rate markets that I really want you guys to kind of pay attention to, because ICT has taught it before, but a lot of people, it goes over a lot of people's heads, but it helps bring clarity to what's going on and in the price action. You know what I mean? So let's first start here with the DXY. So as we could see, this was the Sunday's open price. There's like a new week opening gap there as well. But I'm not going to really look at that. But I mean, we could see the price fell lower, right, and basically reached into that. But there's some other things I want you guys to pay attention to. Definitely mark that and have that on your chart. But the Sunday's open price is here. Sunday's open price is there. Okay. And like I said in one of my previous videos, ICT has also said that we can also use the 2 a.m. time on Monday, Pacific Standard Time, as your Sunday's open price as well. Either one, I mean, it's basically really similar. You get like the same result essentially. But yeah, so basically price declined lower, rallied higher. What did we reach up into? That daily volume imbalance that ICT pointed to weeks ago, like damn near over here, as a potential target. So we basically reached up into that, basically fulfilled that. And then once we did that, we ended up projecting lower. And then price ended up basically just catapulting itself through that to get us back to a daily volume imbalance, which was obviously the weekly draw on liquidity. So we went from one daily volume imbalance all the way back down to another one at a discount. So premium to discount, right? So we could definitely see how price has been pretty intense on DXY. It was quiet for, last week or the week before this week that just passed. And then it rallied up, basically hit that, took out the buy side liquidity. Anybody that was short here is now taken out. Paired smart money sells with willing buyers at a higher price at a premium. So once that was fulfilled, price ended up declining lower. I mean, you could look at this as damn near a market maker sell model here. Consolidation, accumulation, reaccumulation, smart money reversal here. Distribution, redistribution, and then it completely sold off. What you want to also notice is in my Telegram, I was actually discussing something that's pretty important in terms of, I discussed a lot of things last week. So if you haven't already, definitely go and join my Telegram because I walked a lot of this stuff real time. And I also explained things like how to, like an amplification to SMT, which ICT touched on. I just gave my 2 cents on it in the moment with an in the moment example between DXY and the S&P. I also talked about high resistance, low resistance liquidity runs, which I will go over here and see real quick so I could share that with you. Sorry, give me 1 second. If I can't find it, I'll just I'll share it with you. Okay. So this is key here, right? because there's a lot of people that are still confused with high resistance, low resistance liquidity runs. So yeah, so generally when an FVG is looking to get rebalanced on the higher time frame, it's considered low resistance when price is reaching into it. Also, when you're in a market maker buy or sell model, like ICT has said, that original consolidation is going to be a low resistance liquidity run. So because this rallied up and there was this huge imbalance, price likes to do this one-sided move through these types of areas. So basically aggressively sold off through there, only buy side was delivered, and then only sell side was delivered. Then it came back, traced into this, retraded into that imbalance, and then ended up attacking lower to complete the potential market maker sell model here. Okay. So yeah, with that being said, we could see that, there's lows down here. It could reach 4. Just really depends, to be honest. I think this is actually a good target to have for next week. And I'll explain why shortly. But the thing is, we came off this low and closed above here. So I'd like to see us have more interest going lower to fully confirm that, because if we look at the weekly chart, we basically have rallied here, just took out the stops, and then now it's just an indecision candle. So because that's the case, we need to wait for more information. We just took sell side, closed above that low. So yeah, so something to consider in terms of DXY analysis with fundamental analysis relating to that. ICT teaches about monitoring the bond markets, the 5-year, 10-year, and 30-year. I can give you those symbols here so you can understand or know where to go get them and what to look at, because that's also something that confuses people. They don't know, okay, the bond market, that sounds great and all, but what's the symbol on TradingView? Well, these are the symbols here. So this is for the 30-year. This is for the 10-year. And this right here is the 5-year. Okay. And then you can also add things like the bond yield markets, which are actually reverse correlated to this. And if you can get like a reverse correlation relationship showing, this one here is basically like these interest rate markets here, they are reverse correlated to the DXY. So if these are rallying, then we'd expect the bond yield markets to be declining, which you can see here. See? And then that would result fundamentally in DXY declining. So with this rallying, with those rallying, then this declining, that's a good sign for bearishness on DXY, because this is reverse correlated, but the bond market here, the yield market, is correlated positively with the DXY. I hope that didn't confuse you. But yeah, so essentially what occurred in the last week, and then I think that's part of last week that just passed, and then the week before that. So as you could see here, price came lower, took out stops, hit this fair value gap, and then it ended up rallying away with the shift in market structure here after sell side was taken. Okay. Not only that, the main key here is between these 3 interest rate markets, you can see there's an S&T. Okay. Between these 3 symbols, there's an S&T at these lows. Okay. So because that's the case, that's a bullish sign. We were also at a discount, also at a discount, also at a discount. Okay, discount array. So it's a logical level not only to see bullishness in this market here, or in this analysis of these specific assets. You can also see that price is moving higher. If we go to the DXY, we can see how price responded going lower in the DXY as a result of that. Okay, so that basically gave us a risk off scenario, all right, where risk on, my bad. Risk on scenario, meaning that basically price in the DXY is falling and other assets should rise. But this whole crash here did not follow that, which is showing a lack of correlation, to be honest. So yeah, it's just a little bit shaky in terms of correlation, but there's other things that are confirming specific things in the DXY. And then this, this market didn't really respond in a reverse manner as it generally should when there's symmetry in the marketplace. But yeah, the key that I want you guys to really see here is the power of fundamental analysis, and what ICT teaches in terms of the interest rate market analysis. This is just a beautiful picture of what he talks about in terms of when you see SMT at the lows between these three assets, you can see how that impacts the DXY. Also, something to consider as well to amplify that understanding is the fact that we're in a bearish seasonal tendency here. Okay, so there's a bearish seasonal tendency, and that's came to fruition. Price rallied higher. Mind you, it's the beginning of the month. Okay, it's the beginning of the month. So power 3 also is something you want to consider on these higher time frames because it's also relevant there as well from the monthly, even the yearly. There's a yearly power 3 manipulation, accumulation, and distribution. Okay, so that's something very important to keep in mind. And yes, so throughout the week with, now it's going to get a little busy, but throughout the week with the indices, we can see how price basically gave that initial rally, and then it ended up declining, leaving this fair value gap in here. So by Thursday, price rallied up. Let's just go make sure that's, So on Thursday, we saw this rally higher. All that was doing was coming into the daily fair value gap. All that was doing was coming into the daily fair value gap to then basically price in a premium and then sell off at a premium array. What premium array was that? There was previous day's high here that it also took out. So anyone that was selling rushed their stops to there, ended up punching them out. We see how this is a wick here. You can split that wick as well. Can split that wick and we can see how the midpoint of that was respected. And then we ended up selling off and declining. Okay. So I got another interesting thing for y'all to pay attention to. We also see that this is a market maker sell model. And that basically on Thursday was formed by that rally up. Okay. So that rally up, not only was that into a daily fair value gap, there was also a 1 hour fair value gap as well. That was right here. Had a little bit more to close in, which it ended up pursuing. So yeah, in this area here, we have not only a previous day's high, daily fair value gap confluence. We also, if you notice here, we have a new week opening gap from January 15th that it came into and then ended up selling off. Another thing that I pointed to in my community and in the Telegram as well, my community in Discord and the Telegram as well, is the market maker sell model that was showing on this 1 hour time frame. Okay, so there was this 1 hour time frame market maker sell model as well. Going here. This was the original consolidation here. There's a accumulation, reaccumulation, came into the daily fair value gap. The daily fair value gap, or not the daily fair value gap, but the new week opening gap up here, and then sold off, shift in market structure. And then when we start trading further into last week, this was the second stage distribution. that ICT talks about. So this is the second stage distribution and ended up selling off as a low resistance liquidity run to get us down below here. Why is it a low resistance liquidity run? Because the market maker sell model target, or the market maker buy model target in terms of original consolidations, ICT has said is always a low resistance liquidity run. And you can see how that was in fact the case, as price was basically falling lower. Okay. And then of course, getting into Friday where NFP was happening, we had a bunch of chop nonsense, and then, had some smoothness, running through lunch and retraced in lunch, and then price came lower. But yeah, this level was identified way before the fact. We've just been bearish because that's just the sentiment of what's been happening, all the crazy shit that's going on. Yeah, here's the market maker sell model that I pointed to early on before it even happened. I said that was going to be the target. The first target would have been this low and this new week opening gap. See that little arrow there? This is the buy side of the curve, sell side of the curve. And yeah, so pretty much the result of that was this. Okay. See if I got another picture of it as it was happening. See when this rally up occurred, I was calling for the daily fair value gap as well as the previous day's high. See, previous day's high. It's really small in there. You probably can't see it, but it says previous day's high. 1 hour order block with the rest of it being filled. The order block was also there, and then the previous day's high as well, which price rallied higher. That's what we want to see if we're going to be short, right? We want to see it go to a high point, a premium array, running stops, and then take off, because we are thinking like smart money, pairing our buys or our sells with willing buyers at a higher price, and then we look to offset it at discount arrays, or some form of like low, or whatever the case may be, discount arrays, right? From premium to discount, buy low, sell high, right? This was selling high, and then we buy it back lower. All right. But yeah, this was all seen before the fact, as you can see. I had that target over there. We also have this fair value gap here. How just sliced right on through. Likes to deliver one-sided delivery when we have these types of scenarios, just like I discussed over here with the DXY. Okay, slice through, one-sided delivery, low resistance liquidity run. As we could see, slice through, one-sided delivery, low resistance liquidity run, as well as the low resistance liquidity run that was below this market maker sell model original consolidation area. Okay. And then price ended up coming all the way down lower. Had this there's a fair value gap in here, small, like that, which price also smashed on through. So you just completely ripped through it. And then, as you could see, that level also acted as a inversion level, meaning that when it slammed through that fair value gap on the daily, it came back to it, and then it ended up selling off. Okay. So yeah, and then this up here was the 1 hour fair value gap. Price ended up rallying up there before it ended up coming lower. Just like over here, we want to see that. We want to see a rally up to a potential premium array, and then we look for our drops in price. Price did that exact same thing here, rallied up to a premium, and then sold off to attack previous day's low, or previous day's low, as well as the fair value gap. It smashed through it more, and then eventually coming down to the midpoint of this bullish order block here. See? And then reached a little bit lower. But yeah, I hope that makes sense. Hope I didn't lose anyone. There is a bullish seasonal tendency for the indices from what I've seen on the chart, the seasonality chart. Let me go pull that up real fast. So I could just show y'all. So we can see how January is it's choppy, which is why ICT says he starts in February. So that's a nice tip right there in terms of why he chooses to wait and not trade January. Not that he can't, but this is why, because seasonally it's not really the best time. And then February picks up. And then going into the end of March, we see some type of a slight bearish tone as well. And then going from March to May, there's a decent amount of bearishness. What we could see, it does rally, right? So it's bullish tendency, but again, seasonal tendency, you have to understand what the current market conditions are, what's happening in the chart, and then you can base whether you're going to see the seasonal deliver, or if it's going to do opposed to what's being shown in the seasonal chart. So that takes some study, but it's good to have as reference because, like ICT says, it's literally like a map, like a treasure hunting map, And then we can also see here how in March there's a heavy bearish tendency for the DXY, and I'm looking at the 35 year, because that's got the most data. And then if the 15 and 5 year correlate with that, at any given point in the year on this chart, that shows a heavy seasonal tendency in that point of time. Okay. So yeah, that's basically how you look at seasonal tendencies. You got to do a lot of study on this, mark off every single month, and then just go back through a bunch of data and just write down what you see on the chart and then what actually happened over like at least 10 years. You want to get that information known, especially with the one asset that you're trying to trade. That's why you should trade only one or two or three maximum assets, because you can get really intimate with these assets. So but yes, so that's like a macro perspective of this. But then like I was about to say a minute ago, this was a market maker sell model, right? So in the fractal nature and price, or what, like basically, showcasing that fractal nature and price within this redistribution phase, the second stage redistribution of the market maker sell model here, we can clearly see that there's also a smaller market maker sell model intraday inside one of the phases of the higher time frame market maker sell model. See, so higher time frame market maker sell model within the phases like accumulation, reaccumulation, smart money reversal, distribution, second stage distribution, and then determinants. Within those little areas or phases in the market maker models, there's smaller time frame market maker buy and sell models, like it's being shown here. Okay. Which was also called before the fact as well, as price got up into there. I could just pull that up for you guys. See, I see when price was rallying. It's kind of blurry. I don't know why it's so blurry. But I already had, you see the box here, the little green box. That's basically me outlining this potential market maker sell model, and I had the eye there way before the fact. As we were rallying higher, I had this writing here says, look at this wick, the midpoint, and then the new day, the new week opening gap from January 13th. was also or 15th was mentioned as well before the fact. Okay, so this is no hindsight stuff. I'm not just making things up hindsight wise. I also called the trade signal to my group and the Telegram chat, which delivered flawlessly. Easy peasy. And yeah. So another thing. Oh yeah. So the SMT concept, ICT said something that potentially went over everyone's head in terms of how to analyze it. It's very important. Like if, for example, if there's an SMT at the highs here, we want to use DXY to confirm that. Okay, so say this is making a lower high, and then NASDAQ and the Dow are making higher highs. We want to see the DXY promoting that by making higher highs. Okay, or like if this is making a lower high, we want to see DXY making like a higher low. Okay, so like this. Let me so there's like a S&T here, and there's like say the Dow's making higher highs. Okay, DXY. We want to see DXY doing this and then continuing to confirm higher highs, because that's S&T here. That's a failure swing to get down below the low. And if we are bullish on, or if we're bearish on the indices, we want to see price in the DXY going higher. That makes sense? So that's a way to confirm an S&T, because there's a lot of times you'll see like multiple S&Ts all over the fucking place. And to combat that, you need to understand what I just explained here and what ICT has touched on, which may have went over your head. So I'm just making sure that that doesn't go over your head, and understand that importance of that concept in terms of looking at SMT and how to use it. You know, because you could see SMT all over the fucking place, but if it's not at a logical level, like this new week opening gap or a PD array, some form of a PD array, it's basically, and if the DXY doesn't confirm this SMT, then it's basically invalid. So if you're finding SMTs all over the fucking place, make sure you keep this explanation in mind. Okay, you want to confirm with the DXY. The DXY helps you confirm whether that's going to be a real SMT, or if that, you know, if it's going to deliver or not. You know. So yeah, that's pretty much all the stuff I wanted to talk about in this video. I had a pretty amazing week last week. It's pretty on point. And you can go back and study all this stuff, go view what was said, everything that occurred before the fact. And I'm 100% confident that there's like a bunch of gems that I dropped in here. Got a lot of feedback from it, from a lot of stuff this week. So yeah. So I hope I hope you guys were able to learn something from this. If there's anything that you guys did last week, or you know, some trades that you took and you just want to see, you know, maybe you don't know why it worked if you took a trade, or maybe you don't know why it failed. I could definitely help you in potentially finding an answer to that type of question, and just all kinds of other stuff. You know, so I'm here to help. We're all part of the ICT family. So, you know, I feel like I'm obligated to, you know, help in any way that I can, because I've been blessed with the ability to understand this stuff, and I got lots of clarity in the marketplace, and it's been like that for, you know, a few years now. So yeah, so if you guys need anything, let me know. I hope you guys learned something from this. Make sure you guys like, comment, and subscribe. I really appreciate it, and it just helps the channel get in front of more people, and it keeps me motivated to keep doing these types of things. So yeah, that being said, you guys, hope you guys have a wonderful weekend, and I will talk to you guys on the next one. Peace.
King James the Great.